If you want to trade or you are trading cryptocurrencies, forex trading, indices or futures or any financial market, these candlesticks that we are going to be explaining are the only one that you need in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to be explaining all the candlestick patterns that you need to confirm that you are going to be entering for buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and I will see you after this intro on today's video. Okay, welcome back. The candlestick patterns are divided into two, a simple patterns and the complex patterns. Okay, so from the simple patterns, this means that the pattern will be formed by one candlestick only. So we are going to be getting one candlestick indicating to buy or sell in the market. Okay, so from the complex patterns are formed, or is the pattern that is formed by two or more candlesticks. You get more candlesticks to give you a signal that we are going to be expecting buying or sell. Entering from that confirmation, we are going to take a look from all different candlestick patterns that indicating buy or sell in the market. Okay, now these are four candlesticks that we have from the simple patterns. Okay, we have a hammer, we have inverted hammer, a shooting star, and a hanging man. Okay, this is a hammer, inverted hammer, which has the bottom, which has the shape. Okay, now let's start from the simple patterns. These are four simple candlestick patterns that we are going to be looking at by indicating buy or sell in the market. So the first one is a hammer. Okay, this one is an inverted hammer, and this one is a shooting star, and we have also a hanging man. Those are four simple candlestick patterns that we are going to be finding in the market. Okay, so what about from the complex patterns? Remember, simple patterns is when the pattern is formed by one candlestick. Okay, from the complex patterns that we are going to be looking for, the candlestick will be formed with two or more candlesticks indicating or signal buy or sell in the market. Okay, from the complex patterns, we have a bullish engulfing. Okay, where we have this candlestick. The first candlestick is a small bearish, and the next candlestick is a big bullish. Okay, so now from this candlestick, this bullish candlestick will be engulfing the bearish candlestick, will be covering the bearish candlestick. I will explain them from the examples. Okay, so we have also a bearish engulfing. This one has the first candlestick will be a small bullish, and the next candle is a big bearish, which is bigger than the previous candle that is covering the bearish candle. And also we have the candlestick here which has a bearish, which is bigger than the bullish. This bullish candlestick with the bearish big candlestick is called harami, which means in the Japanese language means pregnant. So we are going to explain all of that in a minute. So we also have a bearish harami that has a first big candlestick which is bullish, and the small one which is a bearish candlestick. This candlestick is the mother of the bearish candlestick. I'm going to explain that in a minute. Let's move to the examples and even explaining what are these candlesticks indicating from the market. Remember, in the market, we need to predict the direction of the market. If we get a confirmation or a signal, will tell us that we are expecting the market to be taking us from the direction of buyers or sellers. So we will be entering from that by anticipating the direction of the market based on the indication from the candlestick patterns. Okay, now let's start from the simple patterns. Let's start from the bearish direction. So we have a shooting star. A shooting star is a bearish signal. When the market is moving up, okay, we are making higher highs and higher lows. Okay, so from the high, we have the formation of a shooting star. This time, remember, in our previous video, we talked about the selling pressure. So the candlestick left a long shadow on the top. This is the signal that the sellers are going to be expected to be controlling the market. So when you see a shooting star from this area, we are expecting the market to move to the downside. We are expecting to sell from the shooting star. So we are expecting the market to move bearish. So that's where we enter for sell, okay, from this area, anticipating the market to move in the downside. So that's when we get a shooting star as an indication for sell. So now, after a shooting star, we have another which is called a hanging man. This is a hanging man. This is also a signal that we are going to be expecting the market to move in the downside, to move in the bearish direction. Okay, from here, the market also will be moving up. Let's say we are moving up. Okay, so from this area, we have a formation of a hanging man, which indicating that the market is going to be reversing or changing the direction to the downside. We are expecting the market to move down. Okay, we are expecting bearish candles to take our market downtown. So when you see a hanging man, we are going to be expecting the market to move in the downside, or we are going to be entering for sell. Okay, so that's where we enter from these areas, anticipating the market to move in the down direction. Remember, when we are selling, we are moving down. When we are buying, we are moving up. Okay, those are simple patterns from the bearish side, or signal that the market is going in the sell direction. Okay, now, after a hanging man and a shooting star, we have the candlesticks here indicating that the market is going to be changing the direction to the upside, or we are expecting the market to move on the side of buyers. Okay, again, now we have a hammer. Okay, this is a hammer. The market will be moving down, and then from the downside, we have a formation of a hammer. We have a hammer from the downside. Remember, in our previous video, we talked about buying pressure. So when the candlestick is losing, when the bullish candlestick is losing a body from the downside, we left with a long shadow or a long wick on the bottom. This means that the market is going to be changing the direction to the upside. Now, this time, we are expecting to buy from this candlestick. So now, this is an indication that the market is going to be changing the direction to the upside. We are taking a buy from the indication of this candle. Enter for buy from this area, anticipating the market to change the direction to the upside. So this is a signal from the hammer. So from a hammer, we have another candlestick which has a small body on the low, which means that the market will be moving down, and from the downside, we will appear the formation of an inverted hammer, where we are going to be expecting the buyers to take the market upside. Or when you see this candlestick, this is a signal that the market is moving in the upside, or the market is going to be changing the direction to the upside. So we enter for buy from this area, enter for buy from this area by anticipating the market to move up. So that's how we get a signal from a simple candlestick patterns by indicating a buy or sell in the market. So we have a hammer. We signal that the market is going to be changing the direction to the upside, and even we have an inverted hammer. We signal that the market is going to be also changing the direction to the upside. We have a shooting star where the market will be moving up. By anticipating the market to change the direction to the downside, we have a signal from a shooting star. Okay, even from a hanging man, we have the formation of the candlestick, and then indicating that the market is going to be changing the direction to the downside, or we are expecting to be selling from that signal. So now let's move to the complex chart patterns, candlestick patterns, to see how are we going to be indicating buy or sell in the market. Okay, now let's start from a bullish side. Okay, we have an engulfing candle. Engulfing candle will appear with the formation of the first candle, which is a bearish, which is small, and even we got a next candle which is bigger than the previous candle, a bearish candle, which means that the bullish candle covered or engulfed the first candle, which is a bearish. So this time the market will be moving down. Okay, so from the downside, now we got a formation of a bullish engulfing, which indicating that the market is going to be changing the direction to the upside. We are expecting the reversal to the upside, which means that we are going to be entering for buy from this area. By anticipating the market to move up, we are expecting more bullish candles to move the market up. Okay, that is a signal from a bullish engulfing. Okay, from the bullish engulfing, we have also a bearish engulfing. So a bearish engulfing will appear when the market is moving up. Okay, we are making high highs and high low. Okay, from the high, we have the formation of the bearish engulfing, where we have a bearish small candlestick, which is covered by a big bullish, which gives a name of bearish engulfing. So now, when we see this candlestick, this is the signal that the market is going to be reversing to the downside. We are expecting to be selling from this area, from this candlestick, with anticipating the market to move downside. So from here, we are expecting the sellers to dominate the market. That's where we got a signal from a bearish engulfing. So after a bearish engulfing and bullish engulfing, we have also a bullish harami. Harami means the pregnancy in the Japanese language. So this time we have a candlestick where the market is moving down. Okay, we are moving down. From the downside, we have a formation of a bullish harami, where the first candlestick is a bearish and the next candlestick is a small bullish, which means that this big candlestick, which is a bearish, is the mother of the next candlestick. We are expecting the market to reverse to the upside. Okay, we have an entry from this area by taking a buy. We are buying from that area, anticipating the market to move up, anticipating the buyers to dominate the market. Okay, now after bullish harami, we have also a bearish harami. Okay, a bearish harami is from when the market is moving up. Okay, we are making high highs and higher lows. From the high, that's where we get a formation of a bearish harami. So this is an indication that the market will be changing the direction to the downside. We are expecting to be selling from this area. This signal that the market is going down. We enter from this area by anticipating the market to move down. So we are expecting more bearish candles as a seller's domination. Okay, now from the complex candlestick patterns, we have a bullish engulfing, we have bearish engulfing, we have bullish harami, and a bearish harami. So from this candlestick, those are the stronger candlesticks to be indicating if we are going to be buying or sell in the market. So there are also different candlesticks apart from these ones, but these are the stronger candlesticks that we can use in the market and are easily visible in the market. So from this simple candlestick and complex candlestick patterns is where we are going to be predicting or entering from to take a buy or sell in the market. So guys, remember, before you start using all these candlesticks, you have to backtest the market before you apply them on the real account. Okay guys, again, thank you so much for your time. Remember to subscribe on the channel, leave the comment below and like the video. I will see you next time. Be safe.